36. Some people might know what I'm talking about, some people might not know what I'm talking about, but it's a wonderful day to be alive, especially if you're an Australian cricket fan, and that's all I'm going to say about the topic. So just if you don't know what I'm talking about, just look up Australia versus India and you'll soon find out why 36 is a great number. But this is not a cricket YouTube video series. This is an investing video series. So what I'm going to talk about today is look at the week 5 update of my momentum sentiment portfolio. Some exciting changes I've got in store over the next week, and I'm going to do a video in about a week's time, more than likely next weekend, which is just after Christmas, to discuss the changes I'm making in regards to my portfolio construction. So exciting times. So let's get stuck into my momentum sentiment portfolio. So this is a strategy I started in 2013. Now, when I first started investing, I was 100% fundamental. I was a firm believer that you should just look at the fundamentals of business and think about where the potential of them heading up in, say, 5, 10, 15, 20 years or so, and that's what you should use. And just ignore the technical side, ignore what the share price is doing. And over time, my thinking has changed. It all began with M2 Communications about 7 years ago, 2013, when I saw something happen with the share price, and I made a trade based off what I saw in share price, and it was a very successful trade. And ever since then, I've started using this sort of strategy more and more, and every time I've used it, it's been successful. So in this strategy, what I do is I use a technical signal, which is just a change in share price trend, and fundamental signals, which is when a company releases a positive announcement like a profit upgrade. Especially profit upgrade is the important one. I find when a company releases a profit upgrade, you do see the share price react quite violently to the upside on most occasions. So in August 2020, I've set up this portfolio and I've been tracking it ever since, and it's actually doing very well at the moment. So the goal is to double market returns, which is no mean feat. To get between 15 and 20% is ideal. And this week I have made 2 acquisitions. So I've been idle the last few weeks, but this week, yesterday in fact, I made 2 acquisitions. So these are the 2 acquisitions. So Energy One, I've already talked about in one video I was doing a few days ago, and the other company is called Gentrack, which actually did prepare a video in regards to some turnaround stories I was tracking, and Gentrack was one of them. I plan to release that video tomorrow. So those are the 2 acquisitions I made, both on Friday. In fact, I sold quite a few companies on Friday, but those companies were in my long-term growth portfolio, so I'm not going to talk about that yet. So let's get into the companies that I've bought. So the first one is Energy One. So I bought this at $5.50 yesterday. Now what I'm doing with this company, I decided just to buy in half my my allotment yesterday, just because the share price has run up quite a bit over the past month or so. So it was at $4 in November, and it's gone all the way up to $5.50. Now they did do an upgrade on the 14th of December. Stronger earnings for the 6 months period. So there was a profit upgrade, exactly what I was looking for. And initially I was just going to wait out. So sometimes I just be patient, wait out to see what the share price is doing. But I decided I'll just jump in straight away. Not straight away, actually, it was a 4-day wait. I'll just jump in. And if the share price does retreat to say about $4.75 or $5, I'll buy my second allotment and have my entire holdings at that point. And if the share price keeps running from here, I've missed that $5 to $4.75 window, that's okay because I've already got my allotment. So I did buy near the high, but that's okay. I'm never afraid to buy near the high. And that's actually a good thing because there's no resistance at these levels because we're at all-time highs. So exciting company, this one, Energy One. I've been tracking this company for about 3 years now, and right now I've decided to buy in. I should have bought in during the COVID-19 financial panic. I think the share price got down to like $2, but I've held back, and now finally I am a shareholder. So Gentrack is a company that actually did own at one point about 2 or 3 years ago. Share price did get up quite a lot, and you'll have to wait till tomorrow to look at my chart that goes back all that way. Now it does look like the share price is starting to make potential of a turnaround. They did make a CEO change in October, and I do like the CEO, and I do think this has potential to become a multi-bagger over the next 5 years. Now, I did buy in at 141 yesterday. I put in a bid at 141 and it did trigger late in the trading day. So current price is at 141 just because it triggered. They did release their annual report yesterday, so price sensitive announcements. That wasn't a price sensitive announcement. There was nothing new in it, but annual report they did release yesterday as well. So I'm not don't have a lot of confidence in this buy because just the way the moving averages are tracking, I prefer to see those three moving averages I got here, the 100-day moving average, the 50 and the 25, all to come in line and then all skewed up at once, sort of like a, what you might call a squeezing of the Bollinger Bands, that sort of thing. Hasn't really done that, but I think there is some potential for some good growth in the next, say, year or so. Their guidance, profit guidance for this financial year is quite low. So they actually don't think they're going to be profitable this year. So if there's any bit of upgrade to their guidance, if they are expecting some profitable months, that's going to put a bullet up the backside of the share price. So there is that potential, and I think the share price is maybe hinting that the market is seeing that potential moving forward. So management's being very conservative with their forecasts. So let's get to the companies that are already owned and see what they've done in the past week. So SG Fleet. Now, don't know what happened yesterday on the 18th of December, but the share price of SG Fleet went up 8% when the overall market was down 1.2%, I think it was. So this put a real rocket up my overall portfolio performance, and that's a really good thing. And you can see the share price action ever since it broke out of a bit of a trading range back in late October, early November at $1.80 has been very bullish. So I bought it at $2.17 on the 25th of November, so I waited probably a little bit too long, but we've seen an overall gain of 23% since I bought in. No sensitive announcements over the last week or so, but you can see also the share price finished the week at the high at $2.66. So I'm not sure what happened, not a lot of volume yesterday, so it was just the lack of sellers. And I'm fairly bullish about companies within this sector, this lease financing, what they call it, because I think I've already mentioned this. There's 10 businesses or companies that are in this sector in Australia, and I'm pretty sure there's going to be some consolidation in the next year or two. I think that 10 businesses is going to decrease to say 4 or 5, and usually when that happens, that consolidation happens, usually the companies, the consolidated companies that come out in the end, we see those share prices considerably higher. I might even prefer if SG Fleet are ones bought out, because that would put a real rocket up the share price. Anyway, that's another thing. Mosaic Brands, a tough week for Mosaic Brands. Had a really good week last week. Share price came back a fair bit. It's getting towards 80 cents, which is right at my buy price. If it falls below 80 cents, that would be a sell for me. Don't have a lot of confidence in this company. They are very cheap, but they are very cheap for a reason. So if it does break below 80 cents, this would be almost an immediate sell for me. So keeping a close eye on Mosaic Brands, and we'll just wait and see what happens in the next week. BlueScope Steel. This is another one I've been paying close attention because right now the share price is almost at a 10-year high. They've had 2 earnings upgrades in the past few months. The first upgrade in October, we did see the share price actually go back again. I'm not sure why you'd be selling 5 days after the earnings upgrade at the share price it was before the upgrade. That seems weird to me, but some people get freaked out when the share price starts tumbling like it did. And the same thing with the second upgrade, share price started tumbling. So the funny thing is, after the second upgrade, the share price did open around the 10-year high. And that 10-year high is a good price of resistance. And if the share price of BlueScope Steel can break through that 10-year high, that would be very bullish. So some thoughts have gone across my mind that I maybe should sell out at $18 or around the price it is now. And then if it does break through 18, that's when I buy back in. But anyway, so I bought back in 12th of August at $12.34, way back there, and overall gain is 44%. So I'm very, very, very happy with the performance of BlueScope Steel since I bought about 4 months ago. So you'd always take 44% gain in 4 months. So previous video, I just did this slide and just mentioned different time frame, gets different perspective. So even though it's a 10-year high or nearly at a 10-year high, if you go all the way back to 2007, this was a $50 stock. So a different time frame, different perspective. Doesn't mean the share price can get up to that range again between 40 and 50 just because the shares on issue have tripled in the meantime. It's gone from 170 million to 500 million, and the share price has gone back 3 times. So, in fact, the market cap in 2007-8 was 800 million, and the market cap now is 800 million. So, even though the share price has gone back from $50 to $17 or so, the market cap hasn't changed a bit. South 32, so I bought this on 12th of August, and if you look at the chart, 12th of August was way back at the start of this trading range. I just had to be patient with this. There was a chance it was going to break down below the trading range, but it did break above the trading range about 3 months after I bought in, and then it's just gone through the roof since then. With an overall gain of 15%, so I'm pretty happy with that. Not much action in the trading this week. It's just consolidating around the 257 to 260 range. So consolidation is always good. And the really good thing was when it broke out, it was on really large volume, and that is a very bullish sign. And that's when I should have bought in around the middle of November when it broke out. That was the dead giveaway that this was going to go higher. Costa Group, now I bought this. So you remember when I said I buy based off technical or fundamental signals, this had the double whammy of a fundamental and technical signal. So that was a half yearly on the 28th of August. They were very bullish in the half-yearly report, and the share price went through a price of resistance and kept going up, and then it's just been trading up and up and up since then. So I bought at 360, probably bought at the top nearly at the top there, which is my timing was a bit out there, and share price didn't do much in the last week. So overall gain 11%. Around about $3.80 would be my sell price. So if it did fall below that, that would be a sell signal. But at this stage, it looks like it's consolidating, just like South 32, but if it goes above about 420, that would be very bullish, very bullish. If it goes below 380, that would be bearish, and that would be my sell signal. They did release one price-sensitive announcement in the last week, and that was Costa signs lease implementation deed with Mira. I did read it and just ignored it after I read it, so yeah, I don't think it's going to have much impact upon Costa Group. Well, they did mention something, it will add value to the company, but anyway. Red River, this is a company that is trading, it looks like it's going to be, well, it is trading between a range between 25 and 30 cents. If it falls below 25 cents consistently basis, I will sell. So I bought in at 22 cents on 29th of October, and if it falls below 25 cents, I will sell. 80% gain. It has reached as high as 30%. So again, if it goes above 30 cents, that will be bullish. Goes below 25 cents, that will be bearish, and that would be a definite sell signal. So keep an eye on this one as well. And that's the thing with this portfolio, just keep an eye on all of them, and that's probably why I like this sort of strategy. Empire Energy, very close to selling this one out. Now this is sort of a company that might find its way into my long-term growth portfolio, but I'm starting to wind up that portfolio. So this could be just a flat-out sell and just wait for it to break out again. So I bought at 36 cents way back on the 16th of October when we saw this sort of a good breakout, or potential breakout. Share price retreated, and I thought that was a good price to buy. Haven't seen much price action in the last week. Every time it falls below 35 cents, we see a fair bit of buying. So at this moment, overall gain is 1%. I've just adjusted my buying price. It was 36.5 cents last week. I've had a look at my buy document, and it was actually at 36 cents. So I actually did make it wrong. For some reason, I thought it was 36.5. It was 36. Everyone makes. I'm human. I make mistakes. Anyway, Michael Hill. This was another company that's had 2 positive trading updates, and we've seen positive price action based off those trading updates. So the first one was the start of October, and the second one was just over a week ago. So I bought in just because I was consolidating in between 50 and 55 cents. So I just bought in smack dab in the middle of that. And if it went above 55 cents, that would be bullish. Went below 50 cents, that would be bearish. And lo and behold, we had the positive trading update, and it just zoomed past 55 cents without any problem. My main concern has been low volume, but on the trading update, there was much higher volume. So at the moment, 14% gain. We did see good price action after this announcement. We did see share price go back to 56 cents, sort of retesting that 55 to 56 cents level, which is the level of support. And once it tested it, it pulled away to the upside. So that's very bullish. So this is my update week 5 performance, and this is not including the acquisitions I made. So my portfolio went from a 16.7% gain to 18.2. The overall profit loss went from 4.226 to 4.6. So I'm very happy with the performance this week. I think the overall market was maybe 0.5%, so I was up about 1.5%. So overall 3 times the market this week. So I can't be unhappy with that. And I've just noted they've got 2 sales, Treasury Wine, I lost 900 on that sale, and what's that company called? I forget, CGL, Citadel. There was a takeover bid for Citadel, and I sold as soon as there was a takeover bid at a gain of $1,600, which is unfortunate. That company had potential, and I wish there wasn't a takeover bid. Anyway, now with my acquisitions, of course, my change has gone down because those 2 companies I've just started, just put them into my portfolio. So at the moment, change is 15%, and I've already made a gain on one of my acquisitions because EOL NG1 went up 5 cents just after I bought them. So anyway, so this is how I'll be tracking from now on, unless I make other acquisitions in the next week. Now, a couple of companies I'm close to buying. I've had SRG on my close to buy list for a while. If it gets to 40 cents, I might buy. If it gets below 40 cents, that would be a little bit bearish, but it is consolidating, just like a lot of those other companies you see after they've had a bit of a bull run. They do consolidate, and that's actually very, very healthy. So trading between 42.5 cents and 40.5 cents. So probably a good time to buy would be if the share price got towards 40 to 40.5 cents. Might even put a bid in this week. I haven't actually had a bid in yet. The other company is Macca Limited, thanks to Tim, who recommended I look at this company. A very bullish chart over the past 2 months here. Share price has gone through the roof. I just did a video on this yesterday, so have a look at that if you want to have a more in-depth look at Macca Limited. And the main reason I'm interested in this is an acquisition of Downers Mining, and because it looks like a very bullish chart at the moment. So my strategy with Macca Limited for the next few weeks or so is I want to see if the share price starts to back off a little bit. We're going to see some profit takers move in. If it moves towards $1.10 and sort of test that $1.10 range, which is now the price of support, that's a good price to buy in, because if it's sort of like a no risk price to buy, $1.10, because if it falls below $1.10, you sell, and then on the upside, you have an infinite upside. So $1.10 would be sort of a low risk, no risk sort of price to buy in. And that's my strategy with Macca Limited. So that's all for update week 5. Sorry, I didn't update this slide. And that's all for today's video. Have a good day. Now, again, I'm not a professional advisor, so if you do need professional advice, make sure you seek out someone who is qualified. So just because I'm starting to buy some of these companies doesn't mean you have to. Perhaps you're a different sort of investor than I am. Maybe you're more risk averse. I'm more of a risk taker, it seems like, in my life, in my investing life. But anyway, have a good day. Have a good weekend. Merry Christmas if I don't see you again, or Happy Holidays, no matter what you are, because maybe there are some Christians out there. But anyway, have a good day. See you later. Talk to you. Bye.